Years ago, I sold my second business to trade full time of over 500,000 in the bank and another 225,000 due to me over the next few years. I'm a great entrepreneur. I thought, what could possibly go wrong? How about everything? I spent 2 years burning through the cash that I worked 20 years to build. And don't get me started on how much I had to give up during that time to make the business work. 80-hour work weeks, that would have felt like a freaking vacation. I pretty much spent my 20s sleeping on a couch, pulling all-nighters, growing my company and answering support calls while my friends went out and did things that you're supposed to do in your 20s. Fast forward a decade and a half later, I noticed that more and more of my attention was focused on the markets. And like many of you watching this, the market just had some type of pull over me, something I couldn't shake. And one day I woke up, stared myself in the mirror and realized I don't want to be here doing this. And that was the day I made up my mind to sell my second company and explore the markets full time. It was the worst financial decision of my life. I was miserable for 2 years straight, and this suffering extended to my health, my relationships, and my ego. And if things couldn't get any worse, I suffered an unexpected loss right when I was near my breaking point, further compounding the pressure, and I felt like my brain and life were about to explode. At that point, I did not know how I was going to go on. And climbing out of the hole was almost as grueling as falling down in it. So why am I telling you this? Well, I don't ever want you to experience this type of pain, especially since it was unfreaking necessary. If I could start over, here's how I would do it. First, be extremely open-minded. At my first business, one of my employees was mining Bitcoin when it was $20, and I'm a technologist. If I just would have opened my eyes, I would have seen what was right in front of me. Instead, I clung on to everything Warren Buffett said and believed that valuation and value investing was the only way to make money in the markets. After all, I managed my own books and graduated from Aswath Damodaran's valuation class, so I knew my valuation stuff, so I had a bias towards valuation. But while I knew valuation, I didn't know myself. I hated waiting to see if I was right, and I was tired of hearing of traders hitting triple-digit annual returns while I'm hoping to compound at 20%. So be open-minded and always be on the lookout for great investment opportunities, and always try to realize where your blind spots are. Second, you need to try everything. See what fits for you and your personality. I've tried valuation, trend following, global macro, day trading, swing trading, quantitative trading, algorithmic trading, I think I already said global macro. And while I'm not turning $5,000 into hundreds of millions of dollars like Christian Koualamagi, you'd be hard-pressed to find someone with the same breadth of market knowledge that I have. And this is where most of my edges come from, combining one style with another. So my advice to all new traders and investors who are thinking about going full-time, don't. Instead, double up. Start with valuation, swing trading, or a style that allows you to keep your job so 1, you can pay for your losses when you're learning, and 2, you have the time to understand and react to the market and the styles and setups you resonate, and finally, when you're finally profitable, you can compound your gains faster because you've already done your learnings and paid for them. And if you're one of those that want to be an algorithmic trader, I still suggest starting with discretionary trading first. You miss so much nuance if you don't trade and experience everything firsthand. And that's one of the biggest weaknesses I see with most algorithmic traders, is that they never traded. And lastly, here's how I would start if I'd do it all over again. I would go long and short the highest momentum stocks to the upside and the downside, holding for a few days to a few weeks depending upon the market environment. And if you want more details with this, check out the link in the description below. So hopefully this helps someone thinking about making the leap. In other words, don't do it like me. Put your toes in first, and if you're looking how to combine styles, in the next video, you're going to hear how I combine valuation into trading and tax advantage accounts, because there's one stock that I'm itching to buy in mass. And I don't mean just a little mass, I mean the largest trade of my life. And old Leo would have purchased it already based on valuation, but new Leo realizes that timing is everything. And speaking of timing, that's it for this one. Feel free to ask any questions in the comments below, and I'll respond to as many as I can. Thanks and happy trading.